Home prices in most of the nation's major real estate markets are up again in the second quarter, now just below the peak reached in 2006. But this recovery, while good news for those who already own homes, has shut out millions of aspiring homeowners, with the home ownership rate now at a 51-year low of 62.9%. Joining us to discuss is WSJ housing reporter Laura Kusisto. Laura, so good to see you. If there are so many Americans out there who can't afford to buy homes, how is it that the prices keep going up?
So I think this has been really the confounding fact of the recovery. Every month we write about skyrocketing home prices going up, 4 or 5% a year, and that looks great. But beneath that, there's this really missing pool of homeowners. And the reason why you're getting that phenomenon is because there's been so little new supply built. We're basically at recession levels of new home construction. And so even though you don't really have much new demand, you're seeing prices go up just because there's so little new supply.
So lack of fresh supply, but no new buyers. In fact, there are significantly fewer buyers than ever before, correct? Every year, hundreds of thousands fewer?
Yeah, one economist I talked to estimated that maybe as many as 300,000 fewer people are buying new homes than would be if we were in normal conditions, normal levels of construction, normal mortgage availability.
And what is holding these potential buyers back?
So a whole myriad of factors. I think one big one, probably the biggest one, is the mortgage credit has tightened. And nobody sort of denies that we don't want mortgages to be as easy to get as they were in 2006. But we've kind of swung the other way to the point where somebody with an okay credit score, or maybe a young buyer who doesn't have a really long credit history and a kind of middling income, is really going to struggle to get a mortgage. So that's one thing. High rents have made it really hard for people to save for a down payment. And there also is probably to some degree an attitude shift that people are more wary of homeownership than they used to be.
And there are a lot of people struggling under huge student loans and damaged credit, correct?
Yes, absolutely. You have, by most estimates, about 6 million people who went through some kind of foreclosure or credit event during the housing crisis, and it's very difficult for them to come back and buy a home.
Are we looking then at a whole generation of Americans who feel shut out of the American dream of home ownership? And is this then fueling the kind of anxiety and even political anger that we're seeing in this election cycle?
Yeah, so I think there's no question that when we look at surveys and you ask people, do you want to own a home? Overwhelmingly, people still say yes. Right. If you ask people, does this represent the American dream? They still say yes. And so there is a sense of frustration, especially I think there's a sense more than anything of instability and uncertainty, because one thing about owning a home is that your mortgage payment more or less stays the same as long as you have a sort of typical mortgage. Whereas renting, your rent can go up 5%, 8%, 10%, 15% in San Francisco. Right. And so I think kind of creates a sense of people that they don't really know where they're at.
And for better or for worse, home ownership has been the cornerstone of wealth creation in this country, at least traditionally. So what are the long-term economic implications of a whole generation of people who can't own their homes?
Yeah, so definitely, and there's evidence that shows that if you take your money and put it in the stock market, you can do just as well as or better. But the point is that people don't do that. Right. Home ownership is the way that people have traditionally saved for retirement. And so what does that mean in terms of people's financial stability as they get into old age? Also owning a home is traditionally a way that you might take out some credit against your home, and you might go and take a vacation or pay a medical bill or do any of those things. And all of those help stimulate the economy.
Absolutely. Now, looking quickly at the housing market itself, it certainly hasn't been a completely even recovery. There are hot areas in the metropolitan zones where there are jobs, correct?
Yeah, it's a sort of interesting phenomenon where you have areas like California where people are actually worried that there might be another bubble. San Jose becoming the first metro area where the typical home costs more than $1 million.
Incredible.
Which is incredible. Mm-hmm. And then on the other hand, you go to a market like Detroit or Las Vegas or Phoenix, and we may not see home prices recover to where they were in 2006, in some people's lifetimes.
So what can be done to alleviate some of these pressures? I mean, obviously we need some more low-end home construction, but construction companies are loath to invest in areas that don't have jobs because then they can't sell them, correct?
Yeah, and it's absolutely risky. And one of the problems is that as land has gotten scarcer, they have to go further and further out to build those affordable homes. Do people really want to live there? What happens when the next bus comes?
Right.
But I think that's one answer. We're starting to see mortgage credit ease up a little bit. And also I think some policy analysts feel that we also need to just do more about helping renters. If we're going to have a generation of people who are going to be renters, millions more renters in this country, we need to also start thinking about how we can promote affordability for them.
Lots to be done and lots to consider. Laura, thank you so much.
Thank you so much.